8 August 2023, Tuesday, MEO with Cal once again. Now, CPI is going back to 3.3. Now, this is a number that I shared with everybody probably 2 weeks ago, and people are laughing and say, come on, man, Cal, from 9.1 to 3, that is going to go down further. And I say, no, I believe that August will see 3.3 for July's figure. And in fact, now there's something bad going on. Well, Fargo clients are missing their money. Oh, I mean, I hate to deliver bad news, but things are still developing in US and you need to be careful, all right? So disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. All right, so let's look at this, what I said the last MEO, all right? Now, take a look here. This is the chart that I shared on the S&P 500. I did a video specially dedicated to it. And I said that once we come to the red line, which is somewhere around here, we're going to see a little bit of recovery, right? Remember, I said that once we come somewhere around here, there will be a recovery. And this was proven once again, guys. You need to have a good TA on this. And you can see that we gave a sell order previously, and then we gave a buy. So of course, we did it during our class. In fact, on the 22nd intake, I shared with the students, I say, look, it's time to buy. Today is a buy day because it's moving above the opening price and it's above the MA 200, MA 30, sorry. So that was a very good buy. And of course, we profited from it. And we also bought the Hang Seng. We also profited from it. So guys, this is genuine. Not only one-sided sell, we also do buy. And of course, right now, today, we are selling. Today, 8th of August, we are selling. And our first target will be 44.82 for the S&P 500. Now, the S&P now trading at 45.06, and that will be the first base. If the market breaks below 44.82, the next technical point the market can go will be 44.38. But I'll be quite happy with 44.82 first. Let's take some profit over there, and then we take a look, all right? But of course, if the market close below 44.82, that means that the market is going to close below the trend line, and that should be able to bring the S&P down to 44.38, all right? So this one, you need to take note of that. All right, so let's recap what happened last night. Well, again, I said we called for buy and the market went up. Dow Jones up by 407 points. Wow, primary was because of Berkshire, right? Berkshire Hathaway was the main driver. I'll talk about that later. And of course, the Nasdaq also rebounded by 133 points and S&P up by 40 points. Interestingly, at the same time, the US dollar also climbed up. This is something that we don't, the US dollar was up by up by 30 pips, and even VIX also went up at the same time. This is something very, very interesting. Yeah. Okay, so let's take a look what actually happened overnight. You can see that because you can see that we have a sell-off the day before, right? You can see that the market just literally buy back. Now, this is pure, in my opinion, EA. AI, right? The market just came down all the way to the low end. The market recover, you can see that it go exactly to where it is. I mean, seriously, this is how the AI works now. The algorithms are doing this way. One day up, one day down, one day up, one day down. And of course, the primary reason because Berkshire Hathaway climbed 3%, wow, signaling investor satisfaction with the company's earning report and cash stockpile. Their cash stockpile right now is $150 billion. That's really a lot of money. You can buy a lot of stuff, right? And of course, primary because now 85% of the companies have already posted their quarterly earnings, and 4/5 have exceeded Wall Street forecast. But take note, their forecast is because they lower down the expectation, hence therefore beating the forecast. But of course, again, market is back on risk on mode. Apparently, it's been a better than expected earnings season. So that's why they're staying power. But I say it's because of the adjustment that they did. So all I can say, we just need to be more vigilant as we go into the market this week. Yeah. So you can see that it is the Berkshire Hathaway. Wow, what a power stock. Berkshire Hathaway basically broke the high that they created in 2022, and the earnings is fantastic. And of course, Warren Buffett again delivered, all right? He is still, in my opinion, the best investor of all time, yeah? Now, recently, thing is this, Berkshire Hathaway have been buying some of the US treasuries. Now, do know with so much money in their kitty bag right now, I think for their war chest, they can buy a lot more treasuries, because if they buy the 3 months and 6 months, it's worth it because they're paying at a good return of 5%, right? So it makes sense for Berkshire to actually do this. It's almost a no-brainer, all right? Because rather than buy shares right now, it's the PE ratio is about 19, it's at a high level, it's better to do the treasuries, if you ask me. And you can see now, this is the relationship between Berkshire Hathaway versus the Dow Jones. Now look at the incredible co-relationship. It's like exactly the one in blue is Dow Jones, the one in candlestick is Berkshire. You can see that they move in tandem. My goodness, they really move as if like, it's constructed to be together. So now the thing is this, Berkshire Hathaway has moved ahead of the Dow, as you can see over here. But interesting thing to note, everyone, you can see that every time when the RSI basically hits the 70 zone over the last 4 times, you can see that the market do taper off. So you ask me itself, right, I kind of believe that there'll be some profit taking on the Dow very soon. And the thing is this, oh my goodness, look at this. This is the historical volume of Berkshire in a single day. Oh my God, never seen such a volume before. Now, of course, we do know that Berkshire have some buying package coming in, buy back their own shares, but it doesn't warrant such a heavy volume, right? So in my opinion itself, right, such a heavy volume, there's only 2 reasons to that. One, more people believe that Berkshire is the right stock to buy, so people are buying in ahead, buying more now, or somehow someone is distributing. And of course, based on the RSI again, there is a possible chance to see the market coming off, because in the past, whenever after the earnings is so solid itself, right, you do see the Berkshire coming down, and of course the Dow will follow through. And at the same time itself, right, the CPI data is a concerning factor right now. Now on Thursday, the CPI data is expecting to be 3.3. Hey, wait a minute, we were at 3%, right? Now and look at 3.3 up by 10%. Well, we can see that from 9.1 all the way, the CPI data have been steadily going down. Unless there's going to be a very massive surprise at 3.2 or even 3.1, but I don't think so. I think 3.3 is fair, and this is a number that I stick with that too. I think 3.3 is a fair number. Now, of course, the initial jobless claim, we are expecting to go higher, maybe about 245. All right, that is my personal view. Now, when this happens, inflation is creeping up again, and initial jobless claims going up again, that will tell you a bit of clear sign that there's going to be some potential recession coming in. And of course, you can see right now, the main reason why am I so bullish on the CPI data, because I'm bullish on crude oil. Now, crude oil was at $67 when I called for buy, remember that? And I said that it will go up very soon, and truth be told. Now, initially, there was a strong resistance at the MA 200. You can see that back in April, and it happened again when it was in July period. But of course, in the late part of July, it broke above the 200-day MA, and that was a very strong telltale sign to buy. So now we do have a bit of pullback right now because it's kind of like overbought to some people, but I believe that after the next pullback, it should be going towards the 90 mark. I'm pretty confident that we'll see $90. And what's the reason for that? There are 2 good reasons. Let me explain this to you right now. But before we go into that, right, if the crude oil now, based on what we happened before, the last time we saw when the CPI data was at 5 to 6, that was where the crude oil was about $80. So now if $80 again is back to $80, by right, the CPI data should see at least 5 to 6. But of course, right now, I think maybe about adjustment here and there, we should see the CPI data. If you hit $90, we should see about 4.5 to 5. And that is not a good sign, because Federal Reserve wants 2%, right? Even they do adjustment to 3%, it will be still higher. So watch out for this. So what are the 2 reasons why am I so bullish on crude oil? Well, the first reason is simple. White House didn't buy back their reserve. The SPRS, which is the Strategic Petroleum Reserve Stock, they did not replace it. Look at it. Since year itself, right? Okay, June 30th until today, 1 month later, the volume is still at 371.58 million barrels. They did not cover back. All right, that's not a good sign. So think about this right now. At the low end here, they can buy back $66 to $70. They didn't do it. Now it's at $81. Do you think they'll do it right now? I don't think so. Second reason is this, because I strongly believe that Biden must have promised something, but he didn't deliver, and that causes MBS. The Saudi prince will be upset. Now, Saudi Arabia, the most recent on 3rd of August, says that they'll extend the oil production cut by a month. That means they're going to continue to cut production. Oh my goodness. So if production cuts, supply gets lesser, what do you expect to see? Now, recently in some part of America, it's getting so hot there. So energy utilization is very high because they are using our energy to cool down the environment or their houses and stuff like that. So that's why even bad hot weather, you do actually have energy expansion. Yeah. So these are the good 2 reasons for me. And of course, if crude oil goes up, then of course there could be another round of inflation fear. So if you look at it right now, if we put side by side, even for Apple with Dow Jones, you can see that Apple and Dow Jones, they also move side by side. And today, Apple is actually now down. Now it was trading about 195 to 198 just about a couple of days ago, and now it's at 178. Now, main reason because Apple has a third quarter down slide, okay, for the third quarter in a row. So that basically tells you the current situation of the world, its economy. And of course, if that's the case itself, my position of a recession coming in latest by October is seemingly happening. It could be a technical recession, right? Because now the thing is this, the GDP number is supposed to be positive, but you can see that, right, the sales are actually coming down. And of course, if you actually use my TWB indicator, you can see that since June itself, my indicator has turned to red. That means from this point here, we all know that the upside itself is just a matter of time. It will break down. And once the KSI turns red, you can see that the Apple share slammed down. So again, my indicator, although the price was going up, has already warned us several times to tell you that this upside is going to be kind of limited. And of course, the upside took about 20 trading days and the downside took 3 days. So this is again, very clear, a telltale sign that there is distribution in the market right now. But of course, again, if you look back on the RSI now, it's seemingly at the oversold region. So some people are saying that maybe it's time to buy some Apple to be careful to do an average out. Well, by right, if you see that almost every time when the RSI comes to 30, it is a buy signal. But this time around, I just feel uncomfortable because the volume is kind of thick and the way it's coming off is not the normal, right? So this is something that I want you to take note. Of course, if Apple goes up, congrats to all you guys. All right. Now, you look at this chart right now. Oops, sorry. This is where it gets very, very concerning. Now, this is the US banks chart. All right, let me just bring it to you. There's some, I believe there's some internet issue here itself. Okay, I think we need to, oh dear. Okay, got stuck a little bit. Okay, anyway, my point is this right now. This is the US banks chart. And of course, it has lifted from the March low. You can see that it went up from March low. And of course, you can also see that it's been trying to stay above the moving average. But do you know that there's something that happened recently at Wells Fargo? Well, this is something incredible, something that we don't expect to see. Apparently, right? Let me just bring the chart to you. That was a bit delayed. There's a glitch here somewhere. Give me a moment to settle this. Sometimes this too do happen. Okay, let me just get it done. Okay, there's a bit of issue right now on my side here. Okay, here we go. Okay, done. All right, so the thing is this. We can see that the US bank index is just trying back to stay above the 2,800 mark. But I'm kind of concerned because I believe that there could be a black swan event coming around the corner. So first of all, Moody's has downgraded some US banks, okay? And the thing is this, they are placing about a credit rating of 6 major banks on review, and they downgraded 10 US banks. They did that, all right? And the market didn't really pick it up. So the thing is this, now we have finished downgrading the treasuries and now Moody's downgrading the US bank. This is not a good sign. But the scary part is this one here itself. Wells Fargo customers scramble after deposit disappear from their accounts. So this is big. Then this is really big. And this is the second time this year that Wells Fargo has acknowledged that the direct deposit were not showing in the customer account. Hey, come on, man. It's just that you go to the bank, you deposit, and then the money doesn't show on your account. How would you feel? And the thing is this, the bank took 1 day to react. Oh my God, okay? So the thing is this right now, they are saying that, okay, the missing money deposit has been resolved. But again, this is not going to be good. And something here is interesting. 12 hours ago, lawyers in Wells Fargo case asked for 180 million in attorney fees. That means that someone not paying their lawyers as well. Well, all this thing is happening right now. And I feel that, right, the bank issue is not out of the woods yet. In fact itself, I believe that there should be one more round coming in from now till the October period. All right. So definitely if something big like this can happen again, I can tell you that this will become a potential next black swan. So with all this information, take care, and I wish you all the best in trading. This is Cal signing off. All right, remember, the US Treasury itself is really not doing well, and you can see that despite the recovery the 2 days ago, now it's coming down again. And of course, if the Treasuries continue to fall, that means that there's really lack of confidence in the market. There could be a what they call a cascading effect that causes equity market to take a dive. It's all very possible. Yeah. So with that, thank you very much. Like and subscribe and share this video to all your friends. Cal signing off. Take care. Bye-bye.